Hi everyone, welcome back to the individual taxation classes. In this particular class, I'll be walking you through in detail about the special filing requirement. The special filing requirement may be on account of casualty loss, or foreign accounts and the assets need to be reported, or on account of Kiddie Tax or maybe Affordable Care Act, right? So let's dive into for more detail to understand all the special filing requirements. So, okay, we have two more topics. So, this topic is about special filing requirement for casualty loss. So, when there is a casualty loss, there are certain additional information you need to give in Schedule A of 1040. What is Form 1040? What is Form 1040, guys?
सर जिसके बारे में
Yes. What is Form 1040?
Return है सर, ये income tax return.
So US individual income return.
Individual income tax return, right? So there are certain schedules which go as an attachment to Form 1040, which is income tax return. So if there is any casualty loss, or if there is any special transaction like gift, foreign income, certain disaster require a special filing in the Form 1040. So casualty loss, what is casualty loss? When federal government declared some disaster and you as an individual has incurred the loss in that disaster, then you can claim certain deduction as itemized deduction. For example, if there is any earthquake and there are a lot of building has broken down, right? For example, if there is any flood, like if you remember in Odisha last year, we got a flood, right? So that is considered as a natural disaster at the national level. Same way, if you remember in 2020, in the Louisiana state, we got a flood. So that is being considered as a federal disaster, and that is declared federal disaster. So any such federal declared disaster, and you have lost any personal property in that, maybe on account of earthquake, flood, hurricane, tornado, fire, or maybe any volcano, right? For any such reason. So for those losses, certain amount you can consider in a itemized deduction. So the taxpayer can claim itemized deduction of casualty loss either in the current year, or you can also consider in the previous year tax return also and file an amended tax return for the previous year. So this is a great benefit. For example, let's say in 2020 in the Louisiana state, there was a heavy flood. And a lot of people have lost their houses in that flood, right? So that has been considered as a natural disaster and declared at a federal level disaster. That means the people who have lost their houses and because of that flood, they can claim their loss as an itemized deduction in current year, or they can choose to consider in the previous year income tax return also. For example, if someone home is lost in any flood in current year, and he or she may be like homeless, and he or she may not be getting any job because there was flood all over the state, right? So in current year, claiming that itemized deduction will be of no use for that individual because he or she do not have income, right? So in that case of scenario, the government is very generous, right? They allow the individual to claim that loss even in the previous year income tax return, and they can claim the refund if it is due. Make sense? Make it logical sense?
Yes.
Vivek, Vikas, Mayank,
yes
Rajat, make a logical sense?
Yes.
In the current year, if somebody has lost their house and everything in the flood, so what will he will be claiming as an itemized deduction when there is no income? So hence the government has given the option that you can claim this as an itemized deduction even in the previous year. And because of this deduction, if there is any refund due, then government will pay that refund to you. Right? So if the property is of personal use property or is not completely destroyed, the casualty loss amount should be lesser of the following. So for example, if there is a flood, right, and partially it destroyed your home, but partially it's still okay. Let's say you have 3-story home and the ground floor or maybe the basement have been significantly injured because of the flood, but rest first floor, second floor, and third floor is fine. So in that case of scenario, how do you calculate the value of the loss? The first one is lesser of these following two. The loss of adjusted basis of the property, that means cost. So how much is the actual cost loss, or the decrease in the fair market value of the property as a result of casualty. For example, you have purchased a 3-story home in Louisiana back in 2017 for, let's assume, $200,000, right? And unfortunately, in 2020, the flood came. And in that flood, your basement and your ground floor and your first floor have spoiled, right? So let's assume for this basement, ground floor, and first floor, the cost was, let's say, $100,000. And the market value, let's assume, is $150,000, right? That $100,000 loss or loss in the fair market value of $150,000, whichever is lower, will be considered as the casualty loss, right? And now in that casualty loss, you can further need to make certain adjustment. For example, if you have recovered any amount from insurance company, that means insurance company has beared your loss or indemnify your loss, right? So if insurance company have paid you already something, then for that amount, you should not be claiming deduction, right? So you need to reduce the amount which you have received or recovered from the insurance company, right? Second thing, if you have got any reimbursement, let's say from employer or from any tenant, right? Or maybe from the municipality government, if you have received any reimbursement, that also you need to reduce from the identified loss. And like that flood amount has resulted into certain salvage. Let's say all your furniture you sold as a scrap and you recovered some money from that scrap, that also you need to reduce. And lastly, $100 per casualty or theft you need to reduce. Then you will be reaching to the net casualty loss. From that net casualty loss, you need to further reduce 10% of the AGI. What is AGI? What is AGI? Adjusted gross income, right? To arrive at the deductible casualty loss as itemized deduction. Make sense?
Yes.
Just give me a second. Thank you. So now let's do an example, right? Here we have illustrated an example for you, and this you need to do now, right? So this is your classwork. So let's assume there's a property, household property, right? Which you have purchased, let's say the Louisiana home, you have purchased in $500,000 back in 2017. And in 2020, the fair market value of that house is $800,000, right? So you have purchased for how much amount? You have purchased for how much amount? $500,000. And now in 2020, market value is $800,000, right? And now because of flood in 2020, you have lost your basement, ground floor, and first floor. And the balance book adjusted value is now $300,000. And now if you sell that home, the value you will be recovering is $500,000. That means the loss, what is the casualty loss you have? $200,000 and $300,000 in market value, right? And another fact given to you in the question is recovered from insurance. You have received $50,000 from insurance company and you have recovered $10,000 from the tenant because of some, you can say, he has not given a proper care when it was flood, right? So you recovered, let's say, $10,000 from your tenant, and whatever is the scrap came in basement, ground floor, and first floor, that you have sold for $5,000, and your AGI is $80,000. So now it's your task. You need to calculate what is the deductible casualty loss. So now it's your homework. So I can give you this as a hint. But you need to do the math now. Have you got the question? Like, did you understand the question? Or you need any clarification on question? Guys, are you with me? Hello?
Yes, yes, sir.
Yeah, have you understood question? So you need to calculate deductible casualty loss.
So 121,500.
Say that again. How much?
121,500.
141.
No, 121,500.
121,500.
Yes, sir.
Okay. Any other answer? One answer is 121,500. Any other answer? Sachin, Vivek, Vikas, Mayank, Rajat, Garima.
No, sir, it is 127,000.
127,000.
127.
Any other answers? So, Shubham, first answer was also yours, no?
Yes, sir.
So your final answer is 127.
Yes, sir.
Okay. That is answer from Shubham. Yep. Divya, Vivek, Sachin, Vikas. What is the answer from your side, guys? Are you guys doing it? Mayank?
Yes, sir, I'm doing it, sir.
Vikas? Rajat? Garima? Are you guys working on it?
Yes, sir. I'm trying.
Doing good.
Divya? Garima? Okay. Tell me, like, first thing, what is the casualty loss amount? Lesser of loss on adjusted basis or fair market value? What is that amount we need to consider out of these two?
200,000.
200,000? Right? Are you guys with me?
Yes, sir.
Then what we need to reduce from this $200,000 amount recovered from insurance? Do we need to reduce?
Yes, sir. 1.5 lakh.
Do we need to reduce 10,000 which we recovered from tenant?
My answer is also coming 127,000, 127.
Sir, 127 ही है.
127.
Wait. Don't rush into it. So do we need to reduce the reimbursement from tenant?
Yes, sir.
Yes, sir.
Do we need to reduce the salvage?
Salvage value. Yes, sir.
Yes, sir.
Yes.
Yes,
And do we need to reduce this $100?
Per casualty or theft.
Do we need to reduce it or not?
So it's kind of a casualty or theft, sir. So
So this is a casualty loss. So each casualty loss you need to reduce $100, right? So how much it will be coming to you? $200,000 minus 50,000 minus 10,000 minus 5,000. So that is 135,000.
yes,
Yes, minus $100. How much is it?
134,900.
Minus 10% of AGI.
Sir,
8,000.
answer is 126,900.
126,900.
126,900. Okay, let's see the answer then. 126,900. So first one is casualty loss will be lesser of 200,000 or 300,000. That is 200,000. Let's recover from the insurance, reimbursement, salvage, and $100 per casualty loss or theft. So net casualty loss is 134,900, and 10% of the AGI you'll be reducing $8,000. So final allowable deduction of casualty loss is 126,900, and that will be considered as itemized deduction, right? So will you consider this deduction in current year, previous year, or both the years?
Either.
Both the years.
Both the years. Current and the previous.
How about others?
Either in current or previous.
Either in current or in previous year, or in both the years?
Either.
Sure, lock kar dein? Yes, that's right. So you can consider either in current year or in previous year.
Sir, please थोड़ा सा इसको scroll करना नीचे. I need to understand this thing. बस sir. ये 100 per casualty loss और theft का means क्या हुआ sir?
That's a standard amount you need to reduce.
मतलब per theft or per casualty loss means?
For example, in a year you got 3 casualty.
ठीक है.
So then you need to reduce 100 each.
Got it, sir. Got it.
For example, in January you got flood, in April you got earthquake, and then in December you got fire.
Probably commit suicide by the end of the
year. Right. Okay, so this is last topics. So reporting requirement for foreign accounts and assets. For example, if you are a US citizen and you have accounts and asset in foreign country, then you need to disclose that. If you are non-US residents, like non-resident alien, then also it is being mandatory for you to disclose the foreign accounts to the Treasury Department. So this disclosure go to the Treasury Department, not to the IRS, right? So this is a separate declaration which go to the Treasury Department if you have asset outside United States of America more than $10,000. If your assets are less than $10,000, then it is not required, right? Under the Bank Secrecy Act, taxpayer must disclose all its foreign financial account, including bank account, mutual fund, brokerage account, trust, or any other type of foreign financial account exceeding certain threshold by filing the Financial Crime Enforcement Network Form 114. So this is mandatory. You need to file and submit to the Treasury Department of the Government of United States of America. The due date of filing of this Form 114 is April 15. But these are two separate departments, right? So income tax goes to IRS, and this Form 114 go to the Treasury Department of US, right? However, you can take an automatic extension of 6 months, which is being available till October 15 of the following year. So there is no form required to be filed for the auto extension. It's like granted, already granted, right? So eventually, like most of the people, they try to file it along with the income tax return to get rid of all the filing requirements, but you can extend it till October 15 also without any interest or penalty. The filing requirement is to Department of Treasury, and it is separate from tax return. Make sense? Any doubt? It's clear, straightforward.
Yes.
Next one is Kiddie Tax. Kiddie Tax is basically for taxes for kids' income. When child unearned income is more than $1,100 but less than $11,000, his or her income will be included in the parent's income and taxed at a marginal tax rate of the parent. So what it means, unearned income, that means like the income child is earning not because of his skill set or capacity or capability, but on the income transferred by their parents, right? For example, if your wife got a baby and you have gifted a new home in the name of baby, right? Now the name is on the house, new home is in the name of baby, and you are earning a rental income on that in the name of baby. But actually it is your own income, not earned by the baby, right? So it has to be clubbed into your income. That's what it means is Kiddie Tax. But up to $1,100 a year is exempt. If it is more than $1,100, up to $11,000, it will be added to the marginal tax rate of the parent. And if it is more than $11,000, then it will be completely considered for that parent income whose income is more, right? So taxpayer parent is eligible for the exemption of $2,200 as Kiddie Tax. So maximum exemption is $2,200. One is $1,100, which is not considered as a taxable income of the kids, and additional $1,100 you can also claim as a Kiddie Tax. So total exemption available is 2,200, 1,100 as exempt income in the hand of kid, or 1,100 as Kiddie Tax credit in your hand. Make sense? Last one is Affordable Care Act. Net premium tax credit or repayment. So this is refundable tax credit. So taxpayer can purchase health insurance through the federal or state marketplace. That means if your employer is not giving you health insurance, then you can go and buy directly from the federal or state government marketplace, who are not eligible for the health insurance plan through the employer, and you can claim that, right? So eligible tax credit would be health insurance premium paid minus 8.5% of your household income, that is AGI basically. So that amount you can consider as a tax credit. So now the last question of the day. In order to deduct a personal casualty and theft loss, the loss must be what? Related to federal declared disaster area, deducted over 3-year consecutive period, reduced by the amount of your standard deduction, less than 10% of your AGI. What is the call of the question? What is the call of the question?
So to claim $100 casualty loss, what we need to the disaster should be fall into which category?
No. The call of the question is, in order to deduct a personal casualty and theft loss, loss must be what? So when you can consider casualty loss as itemized deduction, if I simplify. Rajat, Vivek, Sachin.
When government declares it as a national disaster.
Yes, when federal government declare that as a disaster area, then only you can claim the personal property loss in that area as an itemized deduction of casualty loss.
And what about the theft loss?
Yeah, theft loss also. Like, for example, if there is any disaster and you have lost because of disaster and some people have stolen some of your product, right? That also you can claim. Right? Make sense? Any doubt? Guys, any doubt from today's class?
I have a doubt in Kiddie Tax.
Yes, please.
So you said the amount that is given to the child by the parent up to 11,000, right, is tax free. So it's a gift basically.
No. For example, if let's say you have given a gift of, let's say, mutual funds to the kid, right? And that mutual fund is earning dividend, right? And that dividend is taxable income, right? So up to 1,100 will be considered as exempt income in the hand of kids, right? From
Annually.
1,100 to $11,000, it can be considered as a taxable income in the hand of kid. But that tax rate applicable would be the parent's marginal tax rate. But if the income is more than $11,000, then it will be clubbed into the taxable income of parent. Make sense? Or shall I draw some example?
So वो Kiddie Tax का rate कम होगा तो percentage में.
So Kiddie Tax is $1,100. Kiddie Tax credit is $1,100.
No, suppose if it is less than $11,000, greater than 1,100, but less than 11. So
let's say $5,000.
Huh.
For example, let's say Rajat Mathur has given $20,000 mutual fund to his kid, and they are earning, let's say, $4,000 dividend. So in this $4,000 dividend, first 1,100 will be considered as exempt income in the hand of kid. So from 4,000 minus 1,100, if you reduce, how much it is? 2,900, right? 2,900 would be taxed in the hand of kid, but at the marginal tax rate of Rajat Mathur. Let's say your slab rate coming as 20% tax rate, then 20% on that 2,900 would be taxable in the hand of kid. Make sense?
So that 20% of 2,900 will be taxable.
Yes.
As a child tax or as a normal? As
Say
a
that
child
again.
tax? That amount is included in the parent's taxable income.
If it is more than
Who
11,000,
pays that tax? The parent or the child?
the child has to pay. But the guardians are parent. If child don't pay, it comes into the liability of parent because they are guardians. Because they have transferred the income to child. So primary responsibility is on parent, yes.
What about the gifts? So I'm basically thinking, what about the gifts that are given by relatives or any other?
That
Like-
comes in
like
gift tax.
we
That
also-
comes in gift tax. We'll be studying later.
That is separate from.
That is a gift tax is separate law.
Okay.
Mhm. Right? Any doubt, guys? Vivek, Mayank, Sachin.
Not yet, sir.
Okay.
Okay, sir, fine.
So we are done with chapter 1. So tomorrow we'll be starting chapter 2. Okay. So enjoy rest of your evening. See you tomorrow at 4 o'clock.
Okay, sir. Good evening.
Bye.
Okay, thank you.
Sir,